The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour. And some crazy stuff obviously going on today. And, our hearts and prayers go out to all those in the hurricane's path of the Hurricane Sandy. And hope everybody out there gets to a good, safe place, and hope everything, turns out in the end where the loved ones are protected and safe. And, family's the most important thing. You realize that during times like that. Times like this. And in the markets, obviously things are pretty quiet because you have, what do you have going on? Well, you have the equity, New York Stock Exchange, NASDAQ shut down. It's across the board, everything is shut down. And they started off with shutting down the pits, and they said they're going to leave the electronic markets open. And then they went ahead and started shutting down all the electronic markets also. When they shut those down, then that shut down the futures. And so all the future indexes for the S&P and NASDAQ and Russell and Dow, obviously all got flat out at 8:15 this morning. I was getting in there, I was ready for a gap trade, and I'm like, wait a minute, because I hadn't checked right before that, and all of a sudden everything stopped. And hopped on over on CME's website, and this big post, index futures shut down. And so that sort of put a stop right there on doing the gap fill trade. And markets did still remain open. You still had your ags, your energies, and you had obviously your currency pairs, things like that remained open. The treasuries, they went ahead and shut those down early as well. They shut those down like an hour ago. So those are done for the day. And everything is pretty quiet. And so on days like this when you're trading, there's a couple things that you can look at. We'll talk about that. And there's actually some ways to trade Nadex on quiet days. The binaries not only are good for volatile markets, but they're also good for very quiet, flat day markets. So we can talk about that because obviously having everything else, closed down, all the major indexes closed down, sort of has an impact on everything else as well. And that, of course, can close, basically make everything flat. Looking on over and seeing what all we got here, I want to go ahead and pull a few things up for you. And just look at, we had a couple basic news reports come in. And we had a couple other things come in this morning. And let's see here. What we had is, I want to see if we had anything Friday after the bell. I don't think there's anything really at all of major consequence, but I just want to double check so that we get you caught up from any news announcements. Reminder, Europe, pound, Switzerland, all of them had their daylight savings time switch. That really didn't affect any of the markets, but just so you know, they did when it switched on over. But yeah, we had no major reports come out after the bell on Friday, beyond earnings and things of that sort. And then let's see here. I'm trying to see if there's anything else. Yeah, same thing. Okay. So just looking at any kind of alerts that are coming through to see if, any new news we need to be aware of. On Sunday, the yen did release their retail sales, and yen's just looking weaker and weaker. They're looking at doing some more stimulus probably. And anyways, that came in at 0.4%. They were expecting it to be at 1.3%. And last number came in, at 1.7. Actually, they had to revise that to 1.7. It was 1.8, and they moved it down. So they revised it even lower than it was previously. So not only did they, do poorly, they did worse than expectations. They revised the last number down. They did worse than the last number was reported. And then if you go back and you look at September of 2011, it's an improvement over last year. So that'd be sort of the one good thing. That report came out again last night, so we'll pull that up and look at that real quick and sort of the impact that had on the charts and show you that. So we have the U.S. yen, and you can see the numbers right here. It came in and was released right around, 7:50, Eastern time it looks like. So that'd have been, 6:50 Central time here. And so if I hop on over and look at the 6:50 last night, then right about here, report came on out and really didn't have a massive impact. So it was obviously a bad number, but overall, once everything sort of caught up, you can see the yen did continue to get weaker. The dollar did continue to get stronger in the end. And that's what should have happened on a negative retail sales report like that. It should have been bad for the currency. And then the other thing we have is we can check out the diagnostic deviation levels on the U.S. yen to sort of see where they projected price movement to go up and down too. It projected a movement up to 79.81, so we got to 79.82. So pretty much right on the money on the deviation levels. Again, these deviation levels pull implied volatilities out of the market. We post those on our site there. You can get access to those. But 79.81 right there. And then moved on down. Let's see, we can check out the downside if there was really any down movement worth mentioning there, but I don't think there should have been too much. And pull that up. Let's see. Yeah, it really basically stayed flat and then moved on up. But it moved up to a half a deviation point on the U.S. yen. That is your take profit point. If you're still in the U.S. yen trade, you should be tightening your stops. At most, you should be looking for is a half deviation move on almost anything today. Okay, with all the markets being closed, you're going to be looking at those half diagnostic deviation levels. So again, you can get access inside the members area, and just hop on the homepage there. You can get access to the diagnostic members area there. And looking on over, we'll go ahead and check a couple other things out. That was really the only report we had, literally, that came out at all yesterday. And then today, like I said, we had a couple reports come out this morning. Nothing that's a major consequence, but tonight we do have something, okay? So U.S. yen trade tonight. They are going to have their monetary policy statement. They're also going to have their interest rate announcement. Of course, it's going to stay low because it's at like negative 0.10 or 0.10%, whatever it is right now. And then they're going to have a press conference and an outlook report. And there is a lot of expectation of monetary stimulus coming out. Okay, so they really are thinking that Japan is going to do, I don't know, QE23 or something like that. And, so that expectation is there. They do expect it to come out. And so if that does come out, that's going to have a big impact on the yen. And let's see here. Go ahead and let's check out what other reports we have going on right now. And we have, let's see, Bank of Japan, so that's going to come out. And then the reports that came out today were pretty, minimal. They did have a couple other yen reports that are still scheduled to come out tonight before that one. So there'll be like some 7:30 reports coming out. The monetary policy statement, they actually haven't set the time. So that's just going to come out sometime after 7:30 Eastern time tonight. And today we had a couple reports come out here in the U.S. Let's go ahead and look at that. We had the personal spending report month over month that actually ticked up a little bit, so that was good. And that came in at 8:30. Of course, we can see no true market impact on that considering the markets were closed, at least the U.S. indice markets were closed. And again, that came in at 0.8, and the forecast would be at 0.6. So it is an improvement over the forecast. Also, it's an improvement over the previous number, which was 0.5. And if we look on back at the history, we haven't had that high of a number since March of 2012 on personal spending. And you need spending. That's money supply. That's money moving in the market for the economy to get better. So you definitely need the personal spending to go up because that will precede GDP rising. And of course, it has to go a lot more than just 0.8%, but definitely go up. And then if we look at last year and where did it come in October of last year, it was at 0.6. So we were higher than a year ago. We were higher than the expectation. And we were higher than the last report in September. So that personal spending number was literally hit all three cylinders, knocking it out on every single one of them. So that would have been a very good bullish buy trade. That actually would have helped with the gap fill trade this morning when that number came in positive. The market, obviously had about 5-6 points there on the S&P and across the board had a gap and would have helped it fill right in. So we ought to be seeing that when they open the markets back up. That may happen tonight. It may not happen until tomorrow. It may not even happen until Wednesday. So they're saying right now, just depending upon how bad the damage is and what comes through, we're going to see a brunt of that tonight, late tonight, happening in New York. And depending upon how that comes in, will determine whether or not the markets open up on Tuesday or Wednesday or Thursday, or exactly when they're going to open up. And so, of course, we'll keep you updated here on TFNN. Also, you can hop on just a sort of a helpful thing for you. If you hop on over, like for the future side, you can hop over to cmegroup.com, and they're posting their reports right there. Of all the updates. So they have a hurricane update page for everything pretty much across the board, and so you can check that out and how that's affecting the markets and the clearing and the interest rates and settlements and everything else. So definitely just a very good, that's cmegroup.com/hurricane-sandy.html, and I'll post that over there in the Tiger's Den for you as well. And just so you can, sort of know when the markets are going to open back up and not. Now, of course, on Nadex, they had the exact same thing, where since obviously the futures markets, the index markets closed down, they went ahead and closed down the Nadex U.S. indices. Now, the commodities stayed open, and the international indices and the Forex stayed open. And because they're based on the underlying market. So if the underlying market's closed, then they have to close. Just like if you close the New York Stock Exchange, it's a little difficult to have an S&P 500 future contract open. Yeah, overnight, that's one thing, but over days, that's another. So we had that report come out of the personal spending. We also had the core PCE price index. That came in at expectations, and not really a major source of market movement. But basically what it is, if you don't know what the PCE price index report is, it's a little bit different than the CPI. But it only measures goods and services that are consumed by individuals, so not businesses and things like that. So it's more of an individual consumer price index. So not just a price index, but individual price index. So that's why it's personal consumption expenditures. And I'm just looking at, it's an inflation measurement for personal purchases. And then last night we had a couple reports come out. We had a report come out of Europe, and we had and then one come out of Britain. So the net lending out of Britain. So we can go ahead and check out the pound dollar. Look at that right now. And then we're going to do some tutorials too on Nadex spreads and binaries here after we do a little catch up on the fundamentals like we do each and every day. And so out of Britain at 5:30 a.m. Eastern Time, 4:30 Central. Right, not there. There was a big move there. Right about here. Okay. So number came out, had little to no impact. It came in better than expectations. That was net lending to individuals. And that number comes out on a pretty consistent basis. It looks like that number comes out every few weeks. So, but it's changed in the total value of net new credit issued to consumers. And they do release it monthly, but it's like 30 days after the month ends. So that's why we had it, I guess, today on the 29th, because it was the 30th there. And but it basically is new issued credit. So people borrowing money ideally to spend it and to reinvest it into homes, etc. But it's a consumer spending confidence report, really, is what it is. And that came in really high. It's one of the largest numbers that Britain has seen in a long time, since basically the middle of the year, May. And so we'll see if that trend continues or not. But that's, of course, to be expected as we go into the holiday season coming up. And personal spending should be rising. That'd be really bad if it was not rising as the holiday seasons are approaching. So that's really all we have. And then looking over at tomorrow, so we already talked about the yen. Again, that's going to be the big trade of the night. Okay, US yen, that's what you're focusing on. But then Europe will come into focus as the President Draghi of the ECB, European Central Bank. He's going to come on. He's going to do his little speech at 4 a.m. Eastern Time, 3 o'clock Central. And he's delivering, deliver opening remarks at the second conference of the Marco Prudential Research Network and the European System of Central Banks. Basically, he's going to talk. Anytime he talks, the markets usually move, especially with all the issues coming out of that right now. And you can get access to all of those on the ECB website, ecb.int. So if you're going to be trading the euro dollar earlier this morning, or maybe wherever you're at right now in the world, and maybe that may be an afternoon trade for you, then you can check that out at ecb.int. He's coming on at 4 o'clock. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour with Darrell Martin. And we're going over just some of the announcements that are coming out and going out tomorrow. We got the ECB president. He is going to be speaking at 4 a.m. Anytime he talks, the euro seems to move. And, of course, we have the Bank of Japan press conferences going on as well. And then moving on over, we're going to have the Spanish flash GDP. So we had a lot of the other GDPs come out last week, and they weighed on the markets quite a bit. So I not, Spain having more than a 25% unemployment rate, money's not moving. I don't see how the GDP can be growing. So they're expecting it to be at a negative 4.4%, and I could easily see it coming in at that, or maybe worse. Who knows? If it came in worse, that would be very bad for the market. So that's coming out at 4 a.m. That could easily affect the euro dollar right there for you. And then Italy is going to be having a 10-year bond auction. Okay, the time is not completely. It looks like it's not set. It's sort of ongoing. And let's see here. I'll get the website for you so you can look that up. And here we go. And that's going to be dt.emf.gov.it. Okay? And so there's the ECB one. There is that one. So dt.met.gov.it. And I actually got debito publico. Okay? That's where the public debt is going to be right there. And what they're going to do is they're going to have all the information come out about the announcements, the issuances, and what the yield rates are. And they've been ticking down. So they were 5.24 last time. The time before that they were 5.82. The time before that they were 5.96. The time for that they were 5.82. Okay, time for that they were 6.19. And 6 is getting in that danger zone. That's where you head into Greece. Okay, and so everybody's going to be watching these Italian bonds because there's a big fear that Italy will become the next Spain. Spain, of course, becoming the next Greece on down the list. And so that's going to be huge. And that's not at a set time. They're just going to start doing the auctions. And not a whole lot of information I can give you on that one. Just expect it to come out tonight, and it will be part of what affects the market move on the euro dollar tonight. And then let's see here. Tomorrow, wow, they actually are changing a couple of things. Okay, so this is interesting. This is probably due to the hurricane here. The CB Consumer Confidence Report usually comes out tomorrow, but they have postponed the report. And the only thing I can think of is, they don't even have it on here. It's known that it's postponed. So it has to be due to the hurricane. FOMC member Dudley was scheduled to speak tomorrow, but he went ahead and canceled the speech as well. He was going to be speaking in New York, so obviously that makes sense. I'm at the Fairfield County Business Council in New York. And so that meeting has been canceled, so Dudley will not be speaking tomorrow. And let's see, Bank of Canada Governor Carney, he's going to be coming out and talking. So that could affect the U.S.-Canadian dollar, 3:30 Eastern time tomorrow. Okay, so if you're wanting to trade the U.S. CAD overnight there, 3:30 Eastern time, Bank of Canada. And anytime any of the big guys comes out and talks, it usually does have an impact. And then Aussie dollar is going to have building approvals coming in tomorrow as well. All right, so that gives a sort of a summary of the news announcements coming out over the next couple days here. And it'll be interesting to see how this affects everything with this hurricane. Obviously, part of it not being just hoping everybody does fine, but in the markets, just seeing how the markets react when they do reopen and when they reopen, and how that all comes to pass. So now let's go ahead and let's do a couple of quick tutorials. And if you have any questions, by the way, you can give me a call right now, live. All right, and we can talk through anything about Nadex. Going to sort of focus on the Nadex spreads and binaries. And 877-927-6648. Again, that's 877-927-6648. And so now looking over at Nadex. And if you don't have a Nadex account, just hop over to TFNN.com, click on the Nadex banner. As soon as you click on the Nadex banner, then it'll take you over there and you'll click on one of two things, either create account or demo account. So to create an account, it's only $100 to fund a live account, okay? And it takes literally less than 5 minutes from start to funded. So you click start, and within 5 minutes, you can have a live funded account with $100 in it. Now, of course, I recommend you put more in there, like $500, $1,000, $2,000 probably. And can you trade it at $100? Yeah, you can do $5, $10, $25 trades, But when you do a $25 trade on a $100 account, it feels like it hurts a little more because you're like, man, I just lost 25% of my account. So it's psychologically, it's just better to have more in there. So, and then over here to our products, you can go on over to demo account, and you'll see right here in demo account, you can open a demo account. You get $25,000 of funding money in there. This is good for learning how to use the platform. Okay, it takes about 15 seconds to sign up for a demo account. Fill it in, press submit. They'll give you an email or a password in your email. They'll send you an email with the password in it. You can log in right away. Gets you 2 weeks access. If you want to know how to get that extended, just email me and let me know. I'll tell you how to get an extension on your demo account. But stay right there. We'll come right back and go more into depth on this right after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. If you have any questions, feel free to give me a call right there. The number at the bottom of the site, 877-927-6648. And if you haven't checked it out, go ahead and hop on over. Check out our 2-week free trial of my box spread analyzer for trading on Nadex. It also includes the deviation levels, and you can get right in there and you can try it right away. And so we're going to go ahead and we're going to talk a little bit about Nadex and what it is and the benefits of trading on Nadex and how the spreads work in general. So looking on over here, and let's see, checking these out. Yeah, I've just got some test positions on I was showing this morning in a quick webinar. And going on and looking at, we'll check out oil. So let's see how much longer we got left on the oil contracts, and I'll show you exactly how they work. What you want to do is you want to be looking at the diagnostic deviation levels, and so you can see like right here on oil we had an expectation that the market was going to move, either down to 85.25 or up to 87.23. That's our half deviation. And days like today, where you expect the market to be quiet because of just what's going on, right? So with everything being closed down, you're definitely probably going to be focusing more on your deviation levels. And so we hop on over there on the half deviation levels, and we can see that oil did move on down. Let's see here, down to 85.25, and it moved a little bit further on down to 84.66. Our next level that we had on our diagnostic deviation levels was 84.86. So you can see that this went about 20 cents below that. I mean, it basically stopped right there at that 0.7, went on down. So if you were short oil, you've been tightening about right here, and then you tightened again whenever it did this last spike, and then it moved on back up, and now it's heading back up to fill in that half deviation move on the upside. And but again, 85.25 was our half deviation level. It's sort of our main target profit for the day on a half deviation day. And when you see it going through a deviation level with volume, okay, and if it doesn't continue that volume and it starts to pull back, that's a good sign that the market's done. Okay, it's basically they've went down to that maximum expansion point, and they're closing out all their contracts, and at that point it usually is going to reverse. So volume into a deviation level can often signify a reversal, and so that's where you can go in and you can do a reversal like on the Nadex spreads, or different products like that you can trade on Nadex, the Nadex binaries, Nadex spreads, etc. So how would you have traded, say, a short signal on oil this morning? And what we can do is we can look up, there's obviously a lot of different ways to trade, but let's say if we're using, like I use every time there's a pullback, I get back in and I look at another trade right there. And so we had an entry right here this morning about 8:20, and then we had, obviously just a lot of short entries going into this, and then you can see the par starting to pull back right there. And so you can go over and you can trade on the spreads. So let's check out what the spreads are, how the spreads work, and look at them. So if we go in and let's see here, we don't need all this stuff open. There we go. And we'll go over here to crude oil. So commodities, bull spreads, crude oil. And we have just a little bit of time left until they expire out. We go over here and we can check out, say, daily contracts. And now that we're inside the daily contracts, we can get, okay, well, what spreads were available when we were looking to place a trade? So just depending upon, again, when that time was that you're looking to place that trade, we'll see where was the market at and when to go short. So this morning, when to go short on oil. And like I said, we had an entry right over here at 8:22. Okay, so 8:22 go short. So that's Central Time. So we'll check out basically 9:22, and also we'll look at what was the price at right about that time. Right about that time, we had the price around $86, and so we'll check this out. The floor and the ceiling right around $86. Okay. So we could have went in and we could have shorted this contract. Well, what would that have meant as far as a P&L for us? And let's see here. Let's do a refresh. Maybe I have to go to the live account to pull this up right now with everything that's going on. See if it pulls up right there. There we go. Sweet. Okay, got it. And so we get in the market and we have at 8:22, which is 7:22, we have a short signal on the market. And actually 8:20 would be 9:22 Eastern Time. So it would have been right here. Okay, so 9:22, 9:25 right there. So we would have been short, and we would have been able to get in right around $85.75. Okay, well, what does that mean our risk is on the trade? Well, risk is really, really easy to calculate. All right, if you're selling on the trade, and you can just sort of see the selling being the higher number is 86, okay, minus where you get in. So if we go here and go 86 minus 85.75. 25 ticks. Every tick on Nadex is always worth $1. Okay? So if I have 25 ticks worth $1, that means a $25 risk on this trade. So that's my risk. What is my reward potential on the trade? Well, with the Nadex spread, the most I can make is from where I get in down to the floor. So if I got in at 85.75 and the floor being the lower number, 81, okay, is the basically where my target would max out. 81. So 4.75 or 475 ticks, $475. So there's a $500 spread with a $25 risk and a $475 profit potential. And notice how over here it says 500 points because it's 500 ticks wide. Okay? So there's a $500 or $475 profit potential in that trade with only a $25 risk. So now every tick on Nadex is worth $1. What is every tick on the CL, the oil futures contract, worth? $10. So if every tick on an oil futures contract is worth $10, and every tick on Nadex is worth $1, how many Nadex spreads do I need? Okay, it sounds like one of those old SAT questions, right? How many Nadex spreads do I need to equal one oil contract? I need 10. Okay, so because 1 times 10 equals $10. So that'd be like a $250 risk if I did all 10 of them to equal a oil futures contract. Well, that's only a 25-cent stop loss. Okay, and if you think about it, if you're over here and you're looking at this market, and you're thinking about getting in right here, I mean, 25 cents up is not that big of a move. So, we're at 86.14 at this point. Well, our high is 86.34. That's already 20 ticks from our most recent, up move right there. So 5 more ticks would be stopped out. Now, if I'm on the Nadex spread, it could go literally all as high as it wanted to, and then come on back down, and I could still make a profit on this trade. So that's one of the beautiful things about trading on Nadex is you cannot get stopped out on the trade. Whereas if you're trading this on oil, you could have got easily stopped out with a 25 tick move. 25-cent move. There's nothing on oil. This is a quiet day, and it's obviously moved quite a bit more than that. So and then I look at, okay, what's my profit target? So I go in, I go short, and remember we're talking about the deviation levels, right? So I have a first profit target where I want to start tightening my stops at that half deviation move down. So if I want to tighten my stops down at 85.25, then when I'm over here on the chart, and I come in and I go short up here, the market's moving down, and finally hits 85.25, I go ahead and tighten up my stops. So maybe I'm moving it a couple bars behind, whatever. So I've tightened up my stops a little bit right there, and then it keeps moving down. I have my next deviation level. What's my next deviation level? Okay, well, my next one is 84.86. So as the market keeps moving down, 84.86. Okay, so now I'm tightening my stops. I'm tightening them some more, and then you can say easily, like right here, you get stopped out. So we'll say we get stopped out at $85. Okay. Well, if I got stopped out at $85, what did I make on this trade? Well, let's remember, what would we have got in at? Okay, 85, 75 is what we were saying, right? So if we got in at 85.75, it's pretty simple. If I got in at 85.75 and I bought back at $85, so 85.75 minus 85, then that's a 75 tick profit. All right, and that was my expectation. I expected it to move that, to that distance. So, using the deviation levels, that's where they come in really handy. And so I already had a 3-to-1, really a 4-to-1. I got a 3-to-1 reward risk ratio, $75, $3 of profit potential for every dollar at risk. So I made $75 on a trade that I only had a $25 risk on. I did it in, only a couple hours, and I had no chance of being stopped out of the trade by the market spiking against me. And if I take this spread and actually draw it on the chart, this sort of helps too. So 81 to 86, that's our spread. So we can go in here, and we have to really shrink our charts on up, okay? And go in, you can add, usually there's some sort of drawing tool, whether you're using Thinkorswim or NinjaTrader, or TradeStation, whatever you're using, and hop on over and go to a rectangle. And then we got our trade over here, and again, we got an 86. So we just put on our rectangle, $86. Then all the way down to 81. Okay? And then we look at, okay, well, when does that thing expire? It expires at 2:30. So that's 1:30 my time and Central Time here. And so we can go in and we can make sure it reflects that to be, 1:30 Central. And we can even, tighten this up and make sure we got it exactly where we want it, 81 and 86. Hit apply. And now we can actually see the entire box and what it looks like. So this is the box spread. So if I got in here, I can't lose money when it goes above it. And let me move that back down there. So if I got in here, I can't move money when it goes above it. And then I can make all the way down to the bottom of the box. Okay, so again, I can make money all the way down to the bottom of this box. And that's all the way down to $81. Remember, we could go literally all the way down here. And I have until expiration, 2:30, to be able to get in or out of the trade anytime I want to. And this isn't like a binary. A binary is sort of an up or down, an over/under trade at expiration. Now you can close the binary before expiration, which I always recommend you close binaries before expiration, unless you're doing at the money binaries. Okay, so they're just slightly in the money, like basically a $50 binary. Those are the ones that you can actually hold because you're looking at a 1-to-1 risk-reward ratio. That'd be the one reason to actually hold them till expiration. But beyond that, if you're ever doing like out of the money binaries, you're definitely going to want to be closing before they expire. But this is a spread. So if you're used to trading anything, I don't care if it's a stock or future or forex or whatever, you can trade spreads. Okay? They are no more difficult. So the only difference is you cannot get stopped out. Your risk is capped. And yeah, your profit is capped. But, there's not too many days you expect a 5-point move in oil. So I think you'll be okay. And you can also do what I call the ultimate hedge strategy. and that will, that can uncap your profit. And we talk about more of that inside of our, members area. Now, there's all these different spreads, and this is what can get confusing. I was looking at it earlier now. I want to say there's like 15 spreads. Right now, there's 3, 6, 7, 8, 9, 10 spreads that you're going to look through to try to find the one that you want. And, what is the easiest way to find that spread? And so what I like to do is I like to go in and I actually built this for my own trading, and, that we offer it here, is the spread scanner. And so I'll log into that and show you what that looks like. And we'll look at it and go over exactly how the spread scanner works. And basically what it does is it's a really simple tool. Okay? There's nothing complicated about it. It simply takes all the data from the Nadex exchange, feeds it into the server, and does all the math for you so you can find your trade in seconds. So if I go in here and I want to trade oil, I don't want to look through a ton of spreads. So like right here are all the different spreads I have to do the calculations on if I want to buy or sell oil. Okay? Well, that's a lot of math to do. And when I'm ready to get in, I don't have time. And so I could lose out on my trade completely if I waited until I did all the calculations by looking at every spread. I also could pick one that expires too soon when there's one that expires later, so I could give up time to be right by choosing the wrong spread. I also could end up giving a ton of profit potential because there could be two trades with the exact same risk, and one has more reward potential by just hopping in right away and not doing all my math. Well, I don't want to do all that math. I want to trade. Okay, I want to trade from the charts. I'm like, okay, I want to buy oil. Oh, let's do it. And so that's why I made the scanner. So if I go in here and I click on, I only want trades that have the potential to make at least $2 for every $1 at risk. And I don't want to risk more than $100 on a single trade. Well, by doing that, it takes out, notice how we had tons of those. Now we only have, several possible choices that we can look at. And I can go in here and I go, all right, well, that's good. What do we got? So now I have a trade that risks 6 to make 140, but only has 12 minutes till expiration. So as nice as that looks, it's really probably not the trade I want. This one risks 17 to make 129. That sounds, pretty good. But it only has 12 minutes. Well, check this out. This one has a $12 risk, and it can make $285, and it has 42 minutes till expiration. So I can go in here and go, you know what? I want to show me ones that have at least 30 minutes till expiration. That'll drop the smaller ones off. Now I only have 4 possible choices, and I can go in and look at it. But now I go, well, this one has to move 28 ticks, 27 ticks now to be break even. I don't want that trade. So I'm going to highlight these other 3. This one only has to move 10. This one only has to move 3. So if I want to buy, then I have 1 or 2 choices really out of the entire lot. If I want to sell, which we were talking about selling earlier. So if I was wanting to sell right now, I have these 2 choices for me. I can even choose to show me the sell orders. I don't even want to see the buy orders. And now that I got the sell orders up, well, this one only has to move 8 ticks. This one only has to move 2 ticks. Let's see. They both have 41 minutes till expiration. This one's risking $30 to make a potential, and this is huge, potential reward, okay? This one's risking $74 to make a potential $422. So, well, I don't really expect it to move, several dollars in the next 40 minutes. So it's not worth me taking on double the risk. Yeah, I can make $200 more. I mean, granted, that's great. But it's really not worth it because I don't expect it to move that far. And the scanner helps me figure that out. Also, notice how this says I have an $8 reward for every $1 risk on this spread. I only have a $5 reward for every $1 risk on this spread. This becomes my obvious choice. And I simply click sell, and it'll then open the ticket for me directly in Nadex. I don't have to even go find it and look for it. Stay right there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, everybody, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we've just been going over some basic concepts on the Nadex spreads, and I was showing up sort of how oil trade worked, how to use the diagnostic deviation levels with it. And we pulled up a chart and looked at that. And one of the things to point out to you is what's called premium collection strategies, or income. A lot of times they call them income strategies. Obviously, anything's income if you close it and you make some money on it. But looking on over and checking out on the Nadex platform, how would premium collection strategies work on the Nadex platform? And so what I want to do is open this up over here and show you. If you go in, and we're looking at, say, the commodity binaries. And we go over to oil, and we go over to, you could say daily. And then we go over and we look at, okay, well, what were, maybe the 0.7 or the 1 deviation moves on oil? We expect it to be a small move. Probably don't want to go for the 5, so they'll say the 0.7s. And so we go over here to the oil contract, and we go, okay, well, anything above 87.62 probably won't expire. Above that or below 84.86. So we over here, okay, our expectation, 84.86. That put us like, okay, 84.50. All right. Notice that trade right now is only worth $4. So let's go in at it and look right now and go, what would that have been worth this morning if you would have posted it? Could you have actually made some money on it? There was a period of time we could have got in. You could have sold it for, as much as almost $50. So it's like the low on the trade. Let's see here. Was, not 50. I guess that's just a spike there. Okay. So about $64 actually the lowest it went. So they go pretty low. But you could have got in easily at $75 without even trying on that trade. So that would have been a $25 trade. You put it on. Now, if it actually got down to that level, that's when you could look at closing it out. But anyway, so that's one area. Now, what about the upside? Okay, so that's the downside. I'm sorry. What about the upside now? We got oil futures contracts up to 87.62. So, okay, let's check out the 87.50 binary right here. And what could we have sold that at? Let's see, earlier this morning, could have got in for about $10. It's only worth $4 now. Probably not the trade I would have wanted to do just because it's just not that far of a move. Now, where was it at? Like at open, that obviously could have affected it. So you may even have moved it down to say one strike, and 87 would have still kept us within a decent range. And so there was a little bit of money premium collection right there. Really had a good premium collection trade right there on the lower side. And even over on Forex pairs and things like that, you'll see the exact same thing happening, where you go in like U.S. Canadian, like really pushing on that one level today. And so if we go over and we look at, okay, well, let's look at U.S. Canadian, and it's pushing on the 1. So we got 1.0004. We also got 0.9941. So we can go over here and go, well, what about 1? What was that at right now? And right now, I mean, U.S. Canadian, where it's at, let's see here, where is it? At the moment, sitting right at 1.0000 and a half pip. So this one has some premium built into it, and this one has a little bit left in there also. You could have went in there earlier today and actually got some decent premium. So what I'm saying is you can sell the binary, and this is a higher risk strategy. Okay, I expect the market to be flat. Think of this like an iron condor, or really an iron pterodactyl if you want to be specific, iron albatross, where you can go and you could sell premium on both sides. Now your risk may be, $75. Your reward potential is 25, but your probability is very high. That's why you would actually consider doing it. Now you would not want to close the trade out at maximum loss. Okay, so if the market actually got up to your strike, so if you sold like the 1.0020 and the market got to that price, then you would close out the trade right at about $50. So it would be a 1-to-1 risk reward ratio, but with a higher probability. The market doesn't have to move that far, or really at all. And it could move up some, stay flat, or move down, and you could still potentially make a profit on the trade. And that's a simple way to do premium collection on 2-hour binaries, daily binaries, weekly binaries. You could literally be doing this every couple hours. Anyways, I hope you all are having a great day, having a safe day. Everybody out there on the East Coast, stay safe, and we'll see you tomorrow.